Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Mathew. And at the start, if you're tuning in for the first time this week, here's wishing you a very, very happy festive season and happy Deepavali to all of you. And hope that the new season brings in a lot of prosperity for you and your family. Let's talk about how the markets are faring right now. And the benchmark indices, as we speak, down about 0.1%. The Nifty 50 above 24,400. And the Sensex still holding above 80,000 levels. We've come off the low point of the day. But if that gives you the indication that today is a bit of a muted day of trade, then that's not entirely accurate, because really the action is in the broader end of the market, where you have the mid-cap index that's gaining currently, and it's up about 0.75% right now. Or in fact, oh no, that's a small, you nearly tricked me there. That was a small cap index. See, there you go. So 0.75% for the mid cap index and over 1% for the small cap index right now. And so that should point out what the market breadth is indicating. And it's a very stark difference to what you've seen over the past couple of weeks, where the gap is wide, but the gap is in the favor of the advances. Let's look at the sectoral picture as well, because at the start today it was not looking very great, but that picture has turned entirely. There's much more green on the screen today at this juncture than there was at the start today. The Nifty Bank, of course, is underperforming in trade today. It's down about 0.5% or so, but it's off the low point of the day. And in fact, if you look at the contributors on the Nifty 50, then you'll see a couple of the big private sector banks are leading the declines. ICICI Bank down, as well as HDFC Bank, and that's contributing to a little bit of a muted day of trade for the Nifty Bank, or rather Nifty Bank and the Nifty 50. Now, at the start today, we anticipated, based on the commentary for this very large automotive company, Maruti Suzuki, we anticipated that it would be a tough day of trade for the company, but that hasn't come through, especially in the light of the kind of cuts that you've seen in the target prices for some very prominent brokers. They've actually cut the target price quite significantly. So it's surprising the way that Maruti Suzuki is reacting in trade today. Let's talk about that in more detail. Puneet is joining in to talk about this. Puneet, the numbers came through during market hours, and there was that surprise miss on the PAT number that was on account of that exceptional increase in tax outgo. Operationally, though, there was not too much to worry about, really, but the commentary seemingly was a little muted. What did you make of it, and what are the brokers saying?
Well, definitely, so we saw the numbers when, as you rightly said, it came during market hours, and the margins were a little lower. And when we spoke, we had the management on NDTV Profit as well, and in the analyst call as well, they said that this higher discounting is what prevailed in this particular festive season. So that's one of the key reasons that the margins were down. But the company said one particular thing which might have enthused the street, which is that they've seen 14% sales growth in this festive season. So it's from the beginning of Shraddh until Diwali, which is tomorrow. But until yesterday is when the result came out, they said they've seen 14% growth compared to the same time last year. And I think that's the commentary. That's something like the street is taking positive note on. But as you rightly said, brokerages have come out and they've downgraded the stock. And we selected a few reports that talk about the same and what are the key concerns according to them. The first one, Citi, they have maintained their buy with a target price of 13,700 rupees, but it's down from their earlier target price of roughly 16,300, and that's reflective of the numbers in this particular quarter. It's still an upside of 24% from the previous close, so around 20% growth, 20% upside from the current levels as well. And they mentioned that the results were weaker because of higher discounts, and that's led to the gross margin declining. They've cut their EV to EBIT multiple to 23 times versus 26 earlier, but they say that the stock is trading at a 35% discount to its 5-year average, and that might be one of the key things. The valuations are quite different as from Maruti, so they are seeing more upside from here as well. Nuvama, again, they've cut their target price to 13,800 versus 14,600 earlier, still a 20% upside. They are saying that they're tapering down the expectation for the next 3 years on EPS by 3 to 4%, and they are forecasting about 10 to 11% EBITDA growth overall, but they see that the launch of the e-SUV, which is the electric SUV in next year, will be something to watch out for. The target price also includes a cash component of about 2,000 rupees per share. And finally, Nomura is the other one. They maintained, the neutral, but target price is roughly 12,455 versus 13,100 earlier. And they've said that the higher discounting may continue for the company in the next 2 quarters as well. That's a key negative according to them. And sustainability of margins might be a little difficult. So overall, I think the 14% sales growth, as I first said, it's one of the positives. But brokerages are anticipating the next 2 to 3 quarters might be tough for the company.
Yeah, thanks so much for giving us that perspective. And it's important ahead of the chat that we're going to have with Shahina Mukaddam, who is an independent market expert, and Brijesh Singh, senior technical analyst at Opulent Investment. Thank you so much to the both of you, as always, for joining in. And particularly this week, festive greetings, happy Deepavali to both of you, and indeed to your teams and your family. Shahina, I'll come to you first on Maruti Suzuki. What did you make of the numbers and the commentary? And you were listening to what Puneet was saying. What do you think about what the brokers have also said?
To start with, happy Diwali to you, all the panelists and also your viewers. Actually, I heard Puneet and he's sort of described the results very aptly. The issue over here is, yes, while 14% growth is there currently because of the festive season, for the overall year, the management has guided a 4% domestic sale growth. Exports remain stable, good. At the same time, what I believe is that the EBITDA margin dip that we saw is likely to continue on to the rest of the year also, because it was largely on higher raw material costs. Also, they are seeing some bit of softness in the entry-level vehicles. So all put together, what I believe is that it is better to buy Maruti if you would like to in your portfolio on dips, not at current levels. I would prefer at dips because I see while the price may not go down too much, the appreciation in my view is going to be capped for the next couple of quarters. One is because of course, slower growth. Two is because valuations. If you compare it in the overall four-wheeler space, yes, of course, it is cheaper than Hyundai, but at the same time, it is much more expensive than Tata Motors. So in my view, I believe if one is to look at adding on to this overall space, which I think is going to show some bit of consolidation over the full year, it would be better to pick up a Tata Motors over a Maruti for the medium term.
Tata Motors over Maruti Suzuki is the view. It is time to now go to the questions that some of you have already sent. And by the way, if you're tuning in for the first time, wherever you are tuning in from, that number is where you write your question to us. And if you are writing in for the first time, tell us your name as well as where you're tuning in from. That'll be helpful for us. Natco Pharmaceuticals is the first counter that we're talking about. Srinivas from Bengaluru is asking about this. Apologies, he's bought at levels of 1400 or thereabouts, and he's asking whether to buy now to average his cost price. It's not a very large loss that he's seeing, Brijesh, but what's the action on the charts indicating?
So, first of all, good morning, and wish you and your family and all the viewers, team members of NDTV Profits, happy Diwali. Regarding the Necto Pharma has been considered, then I'll say that hold on would be the strategy. Nothing wrong, no doubt. The stock had seen lower highs formation. The previous swing highs were 1639, followed by the 1481, and now the swing low is 1293. So I'll say first of all hold would be the advice. Regarding with the stop loss has been considered. If it is for the longer term, when I say longer term, then I am assuming that it is looking for 9 month to a 1 year perspective, then keep a stop loss of 1150 on the closing basis. If it's for the short term basis, then I'll say 1250 is the stop loss. Keep that thing in a mind on the closing basis. Regarding the resistance has been considered. Stock has a resistance at 1460 odd level, so that is a resistance where if it crosses and if it's sustained, then we can see stock jumping back towards the level of 1680, which is a 52-week high. So hold on would be the perspective with the stop loss of 1230.
Okay. PNC Infra is the name of the counter we're talking about next, and Mahalakshmi has got this question. He's writing in from Hyderabad. He's a long-term investor. He has bought 1,000 shares at a price of 449, and so he is incurring a significant loss at this juncture. Shahina, on the fundamentals, he's got a long-term perspective, and he hasn't defined it, but I don't think that he's in a hurry to sell. But what kind of advice would you give based on the fundamentals that you've read of PNC Infra?
Well, on terms of fundamentals, actually, the debt is pretty high. So, but in terms of numbers, I think they should report decent numbers, which actually has been also the case in the first quarter. But if I was to buy as of now, I would be buying it at dips. I would be buying at lower levels. And if I'm holding it also, you can hold it, but do hold it with some sort of a stop loss, which could be closer to maybe something like 300 or so.
Fair point. ICICI Securities is the next counter that we're talking about, and Guru's got this question. He's bought at prices of 400 rupees. Let's see where the stock is currently trading, and he is in the green. The stock is currently trading at 817, quite considerable gains at that. So on the technicals, what would you advise him to do? Would you say he should take some money off the table, Prajesh?
So, first of all, congratulations for this guy who bought the share at 400. Now it has been trading at 870. So already the double money has been there. So practical way would be that at least book some partial profit, 25% to 40% around, and keep a stop loss of 800 on the closing basis, and hold would be the advice. Regarding with the suppose he's looking for the time period is like say for a 6 month. Then I would be saying hold would be the advice, as I've been saying, like 1,000 around the target lies, and the next target for the 1 year plus would be 1,200. So 800 would be the stop loss, trailing stop loss, partial profit should be booked. First target would be 1,000 followed by 1,200, 1,210 would be the next level as a target.
Okay. This is an interesting question, and generally I restrict it to one per viewer, but I'm going to take two because Geeta doesn't post very often and she's a long-term viewer. Geeta, your question is on transformers and rectifiers and Varun Beverages. Completely different sectors, Shahina, but she's asking between these two, based on the fundamentals, if you've got a 3 to 5 year time frame, which of these would you buy at the current juncture?
Well, I would prefer transformers. Varun, of course, in terms of quality of management, type of products, growth, everything is very good. At the same time, in terms of pure valuations for the, maybe I would say shorter term, medium term, in my view, is a bit stretched. So I believe it should show some bit of time-wise correction rather than price-wise. At the same time, transformers is doing pretty well. It's of course a small cap. Market cap is about 11,000 odd crores, but it is doing very well in terms of numbers. So they have shown a very strong growth in terms of profits, turnover in the September Q2. So there I believe price movement could be better for the shorter to medium term. So between the two, I would prefer transformers for the shorter term.
Okay, I'm coming back to you. Jyoti Karthik is asking this question. She's writing in from Mumbai, and Reliance Industries is a counter that she wants to know about, China. She's wondering whether to buy it this weekend, so therefore ex-bonus. Would you buy it for 3 to 5 years? It's seen a little bit of a drop over the last month and a half or so. If I'm not mistaken, about 10% or so has been erased. Would you buy right now?
Well, yes, you can. You can start nibbling into Reliance for your overall portfolio. But I do believe that I'm not very positive on the overall market movement for the short term, for the next say 3 months, 6 months. So in terms of buying, I would prefer to keep buying in smaller lots and spread it out over the next couple of months. Of course, Reliance should be part of your portfolio because it gives you an opportunity to be in the telecom segment through Jio, in the retail segment through Reliance Retail, as well as in some of the other segments which may not be very strong currently, like the oil segment, oil and gas. But I think going forward, it is likely to be a decent part of your portfolio if you are holding it for the longer term. So yes, but please buy it in lots.
On the topic of O2C, and this is a question on my end as well, Shahina, are you seeing signs that the GRMs, I should stipulate, the margins, the marketing margins are bottoming out, that they will improve in the second half? And from that perspective, how would you treat the downstream companies?
That we will have to see depending on the oil prices. If the oil prices have stabilized and will, move up from here, then yes, GRM should improve. But in my view, that's a bit of a risky call to do, to buy OMCs based on, the expectation that GRMs will improve. So I think it is better to avoid the overall space. And, Reliance gives you that opportunity to be there into that space. So if you want to be in, the oil segment, O2C segment, better to be in Reliance.
That's a fair point, and thanks for that clarification. Bhavdeep Sharma is asking about BCL, and this is a stock that's trading, BCL Industries, trading at 57.6. He's bought at a price of 59 rupees. He's got 1,300 shares, and he's incurring a bit of a loss right now. He's asking whether it can be held or should he sell at this juncture. And I'm asking on the technicals, Brijesh, what would you do with this?
See, the structure is little bit towards the sell side. Why I am saying so? Because the stock had a multiple resistance at 65 to 68 band, one part. Second part, a simple 50-day simple moving average followed by 200 simple moving average. The stock is trading below that. So whenever such thing happens, that indicates that the stock is in the bear wheel. No doubt the stock had a base at 53 odd level. From there we have seen a pullback. But still, I would be saying the strength, the indicators, the price pattern are suggesting better to be out. So either he can book at the present rate, some losses can be taken, or at the par at 59 rupees around, and also he can be out. But the strength is not up to the bull side.
Okay. All right, so that's the view on BCL Industries. The next counter is one in focus. If I'm not mistaken, it's gaining in trade. Let's pull up L&T right now, and it's ahead of its earnings, which are expected post-market hours. The stock is trading up about 1.5% or thereabouts, and it's at very close to the high point of the day. But the question is from Vetri, and he's writing from Tamil Nadu, and he's asking whether you can expect a rally on the back of the earnings. Shaina, if I'm not mistaken, the earnings are not going to point to something very significant on the fundamental side, right? There's a few question marks in terms of execution, and if I'm not mistaken, also on margins. Are you looking at the numbers, and what are you looking forward to?
Yeah, I expect the numbers to be a bit soft only. So I do not expect to see any major rally based on the numbers per se. But L&T for the longer term, because of its order book position and increasing orders, both international as well as domestic, you could look to add, if you get any major dips, like, especially if you get, something close to about 3,200, 3,250. I think you could start again there, like, Reliance, like other of the large caps. You could start taking smaller bets for the medium to longer term, because the overall market, in my view, is likely to remain volatile over the next couple of months. So I would prefer some quality large caps to be part of the portfolio, but take it in bits.
Yeah, take it in bits. Dr. Gupta has got the next question. Shree Cements is the name of the counter that he wants to know about, and whether he should buy it at the current price. The stock is currently trading, just about 1/3% or thereabouts higher, and for the year so far it's not done too much. Brijesh, on the charts, what would you suggest that that should be done here?
So Alex, we all know the cement rally starts from month of October, November, and goes up to the March, April. So looking on that time frame, Shree Cement, if someone wants to play, present it can be used to go long. 25,400 around it's been trading. Multiple times the support has been in the band of 23,000 to 25,000 around around. So in that band scenario, if it trades, I would be saying that one can look out to buy. On the higher side, it has a resistance at 28,500 to 29,000. So where the supply comes. So present rate or dip can be used to go long with the stop loss of 23,500, dip for the 28,500, and any closing about 29,000, then the fresh rally can take the stock towards the level of 31,500 to 22,000.
Okay. I want to pull up ABB next, and this is a counter that's done incredibly well, and on the back of fundamentals, I might add. We've got a viewer, Sambaseva Rao, who's writing in from Vijayawada, who's bought at a price of 5,375. The stock is currently trading at 7,483, so he's making a substantial profit here already. The question is, should he take some money off the table? Should he book his profit, or should he continue holding for the long term? Shaina, on the fundamentals, what should the view be here? Because a lot of people have come in along this run that we've seen to the current market price and saying that it's a little overvalued, but then it's defied all expectations.
Yeah, I would agree. It is slightly overvalued because valuations, P and other valuation parameters are pretty expensive. Considering that it is in a space which is capital intensive, but at the same time, I think, if you're a long-term investor and you don't want to keep trading in and out, then you could continue to hold, because I believe government capex will pick up next year. I mean, this year is likely to, we are likely to see it a bit lower than what we had wanted to see, especially if you we go by the first half track record. But things should pick up in the second half and first half of next year. So overall, I think this stock has given you a decent return. One of the large caps that has done pretty well over the last 1 year, and I expect that even going forward, it should do well given that it is in a segment which is growing fast. So I would continue to hold if I'm a long term. Short term, you can part book profits because valuations are expensive.
Fair point. All right, that's a view on ABB, and it's already given up a little bit of ground from the high point, as you can see from that 12-month chart. Let's talk about Jamna Auto next, and Satya is asking this question. He's incurring a loss in this particular counter. I do not know his exact buy price, but around 20% is the loss that he's seeing right now. Would you hold on to this for another year? Brijesh, the question essentially is for Samvat 2081. Would you hold for one more year?
So it's if we look out the chart on the daily time frame, the stock is near the support zone, 108 to 112 zone. Even on the weekly time frame, the stock is near the 200 simple moving average on the weekly time frame. So I would be saying if it doesn't give closing below 105 on a closing basis, if it holds then this level of 105 on the closing basis, well and very good, one can hold, but the resistance would be 125. So if it gives closing of 125, then we can see a nice rally, and that nice rally can be seen towards the level of 140 to 145. So condition applied is 105 should be broken. If it breaks, then better to exit.
Okay, Senco Gold is a stock that has been in focus this week. There were some murmurs of an IT raid. There was a clarification by the company saying that no such event took place. So it is bouncing in trade today. It's up about 6.3% or thereabouts. On the technicals, are there any indicators that you would watch out for, Brijesh? Because we've got Nirmala from Bagalkot in Karnataka who's wondering whether to buy at the current market price.
So yesterday we have seen stock making a bullish candlesticks, a hammer candlesticks was been formed. So keeping that thing in mind, that low of 1035, one can keep that thing as a stop loss. Would not be suggesting to buy at the present rate. Somewhere around below 1180, if it trades, then well and very good. Your risk reward ratio would be in your favor. So below 1180 would be the buy call with the stop loss of 1035, and then we can see a first hurdle towards the level of 1280 to 1285. With that cross, then stock can jump towards the level of 1401. So it would be on the buy side, but condition is that not at the present rate. Let it trade somewhere around 1180.
A quick view, Shahina, on Ola Electric, and then we hit the rapid fire segment. Rajesh from Bengaluru is bought at levels of 101, and the stock is currently very close to the issue price. In fact, it went below that briefly in trade today. Would you hold or would you sell at this point?
I would hold. There are issues which the company is trying to sort out. I would give them the benefit of doubt and hold.
Okay. All right. So on that note, it is time to hit the rapid fire segment. Both of you know what this is about, but I'll remind you nonetheless, 2 minutes. I'll throw as many questions as possible at you. Do try and answer as quickly as you possibly can. The first question is on Bikaji Foods, and this is from Arbind, who's writing in from Jharkhand. Would you buy this for the next 1 year? 843 is the buy price. Brijesh, is it a buy for you?
No, I would be avoiding. If it trades below 800, then the buy would be there with the stop loss 740.
Okay. Samvardhana Madasan Sumi bought at an average price of, I do not know if this is actually right, but China, would you hold if you bought, and would you hold for the long term?
Yeah, probably partly. I would take part profits and hold the rest for the longer term.
Okay. Not wiring. This is Samvardhana Madasan.
Yeah.
All right. Yeah. IDFC first. If you bought at various levels between 67 and 73 and you're looking to hold for the next 2 to 3 years, Parvati from Mumbai is asking, would you hold China for the long term?
I would prefer other banks like Federal. No, so I would exit.
Okay. Rajni Singh is writing from Uttar Pradesh and wondering whether or not... okay. Titan, right? Okay, Titan bought at a price of 3,493. He's got 9 shares, and what are the possibilities of the action in this week? And he's specifically talking about Murat trading. So, very short-term charts. Brijesh, any indicator that you would watch for?
So I would be saying just keep a stop loss 3140. It's near the support zone. Pullback rally can be seen. That level on the higher side would be 3350.
Okay. A long-term view on Bank of Maharashtra is being sought from Srinivasan. He's seeking 15% on an average growth per year. Is that possible, Shaina? Would you hold for the long term?
15% looks very difficult. I would, if that is my target, then no, I would not hold it.
What would you buy then?
I would buy Federal Bank if I'm looking at smaller banks, or large bank, maybe SBI, ICICI Bank.
Okay. Last very quick view on, okay, you've already given ABB. 8,082, so slightly elevated levels. Would you hold for the medium term still, Shaina?
Yeah, I would hold. It's expensive, but I would hold for the medium to longer term.
Okay, all right. Shaina as well as Rajesh, thank you so much for joining in. Again, let me wish you festive greetings from all of us here at NDTV Profit. Happy Diwali to both of you. All right, and that brings us to the end of this particular edition of Ask Profit. Thanks so much for joining in. There's lots lined up on the other side of this very quick break, and this is NDTV Profit.
Hello and welcome. This is NDTV Profit and we are getting you the special Diwali edition on Chartbusters. Well, the endeavor here is to get you the ideas that you can trade from Samvat to Samvat, keeping the long term in mind. And while we have done plenty in terms of fundamental ideas, especially when markets are at the juncture at which they are, we thought it would be a great idea to give you a good analysis on where technicals are leading us. And we have the best of the technical analysts with us on our panel for this show today. Well, starting off with Soni Patnaik, she's from JM Financial, Vaishali Parekh of Prabhudas Leeladhar, and of course Kush Bora of kushbora.com. All of us getting together to give you the best ideas in terms of what we can do, keeping the next 1 year in mind. So plenty to take forward to, but let's start by taking a look at how indices have panned for the past year and what we can expect going forward. The Nifty 50 specifically has come off from its life highs, and while the correction, well, it does seem like at least in the near term it's done, the question really is that are we expecting a little bit more volatility before we start another, well, up run? The same for the Bank Nifty. And even when we do have fundamentals weighing down and, taking a lot in terms of the way these indices are moving, the Bank Nifty specifically in terms of earnings, well, there's always the technical aspect, the price, the volumes, as well as the various, well, indicators that come into play based on which a lot of participants base their decisions on. With that, let's take this conversation forward with our esteemed panel here. Well, good afternoon to all of you, and thanks so much for joining us here. Well, I'm going to start by taking stock of the benchmark indices. Soni, let's start with you. How are you expecting the Nifty to come through over the course of the next 1 month? Or rather 1 year?
Sure. Good afternoon, Agam. Thank you so much for having me on the show and wishing everyone a very happy Diwali. Yeah. So see, I think right now what we can see is that Nifty has taken a good support from 24,000. It has even bottomed out as well. So there's a possibility that, it can head towards 25,000, 25,200, which is going to be a very crucial level to cross. Right. Only if it's able to cross that resistance level, we can say that it has seen a reversal pattern. It has maybe bottomed out, and there's a possibility that even on a longer term or maybe a medium to longer term, it can head towards 26,500 odd levels, maybe like a yearly position. So it's going to be very crucial for the index to cross the resistance of 25,000, 25,200 odd resistance.
Right. And of course, 25,000, while it becomes an important one, because that's where we saw a little bit of an uptick, and after that we once again started seeing a little bit of a letdown on the Nifty 50. We're also watching out for the lifetime high, which the Nifty 50 made on the 30th of September, and that was on an intraday basis a high of 26,134. Vaishali, is that a possibility? Is that on the charts? That we could potentially see that over the course of the next few months?
Very good afternoon. Yes, so this is just before we were to come on the show. We were just having an understanding on the market. So technically also I concur with Soni that yes, for now, market has shown some stability at 24,000 levels. From here on, we are seeing a bounce. So the view remains the same, that we need to see a bounce back coming at least to 25,200, and that is going to act as a hurdle. So once we see a decisive move above that, I think we are back on track and look for higher targets. And to support this view, I would say, yes, Bank Nifty has not come to the previous low. It is still holding on very well. So I guess the frontline stocks are going to support the market to see a further run-up coming from here on.
Fair enough. Kush, any differing in this view or more or less the same?
Agam, first up, a very happy Diwali to you, to all the viewers and the lovely ladies in the studio. I wouldn't say it's a divergent view. It's just that I would like to give a number on the downside, just to put it out there. Since we're talking about this possibly being just a rebound trade or a dead cat bounce, from a medium-term perspective, because see, the markets have not really seen a meaningful correction from, let's say, the 2020 rally, that began. Right. So if a further downside, a round two of selling were to come in, we could perhaps be looking at a 22,500 kind of a area which had proved to be a resistance zone before the Nifty started moving up. Sure. So on the way down, that could be the key level to watch for. let's just hope that it doesn't really get there. But if the markets are able to sustain and cross their near-term averages, moving averages, then perhaps you could see a leg up. My personal view is that there could be some consolidation, perhaps with a mild negative bias going forward.
All right, Kush, let's take stock of the Bank Nifty as well. I believe you can extend it to the rest of the BFSI space there too. But how are you reading the charts when it comes to that specific index?
So, this is where the divergence really kicks in. We saw something yesterday where the Bank Nifty was up 2% and, the Nifty wasn't really doing as much. That may not play out exactly that way in perhaps a medium to a long-term perspective, and that's where the Nifty might keep getting support, in the interim, because the Bank Nifty is looking on a solid footing. As Vaishali ma'am rightly said, right, even in this kind of a fierce fall, Bank Nifty hasn't really touched its, near-term lows. So there's a good possibility that there's a base already in place around the 50,500 odd levels from a positional standpoint, and the banking index could see a sharp rebound, and this I'm talking from a year's perspective, where levels up until 55,000 and higher are also very likely. Now, not just Bank Nifty, the entire banking space, or rather the BFSI space, is seeing a lot of traction. So even some picks from the AMC space or the insurance space are starting to do well. So if you want to perhaps look for something as a portfolio construction idea, the BFSI space on the whole is something that you want to keep on your radar.
Right, sure, fair enough. Vaishali, the recent low, the August low for the Bank Nifty was somewhere around 49,900 odd, which means that, the round number 50,000 was broken, but of course that got bought into. Any chance of that being breached in the near term? And on the upside, what are you keeping an eye on?
So currently what the chartical formation shows and yesterday's bullish candle, I think for now 50,000 should act as a crucial support.